Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. Today, we want to talk, well, not for the first time to Michael Henrichsen, the CEO, but the first time we present to you and want to introduce to you Goldshore Resources. Michael, welcome. Yeah, welcome back. I have to say, we did a lot of interviews with several other companies. How are you? All good?
Yeah, very well. Thank you. Thanks for having me again. It's good to be here.
Yeah, thanks for taking the time. Very interesting company, I must say. I went, of course, also through the presentation. And that looks like that could become something big. But before we start really to go into it, you might want to give us a little bit of an overview on the company, please. Where are you based? What are you doing exactly?
Absolutely. Well, we're obviously a Canadian-based company. We have the Moss Gold project, which is a large-scale resource in Northern Ontario, 6.7 million ounces. And it's just off of the Trans-Canada Highway, about 110 kilometers from Thunder Bay, which is the center, really, of Northern Ontario. So beautifully situated.
Mm-hmm. Okay, super. So we are on a tier 1- jurisdiction. That's always important, as we know. And you said it already, almost 7 million ounces of gold in resource. I saw you have approximately 23% of the resources indicated. The rest is so far inferred. So what are your plans to convert the inferred resources?
Well, really, we're here to develop the asset. I mean, we want to bring this forward so it can be permitted and ultimately constructed. So our plan over the next, say, 24 months will be, let's get all the infill drilling done. Let's get all the environmental work done. Let's get our negotiations completed with the First Nations and really enter the permitting process and the pre-feasibility study, all at the same time in about 24 months. I mean, that's the very short answer to everything. But ultimately, we're here to grow this asset, but we're also here to develop it.
Okay, super. I saw in your presentation also you are working on a PEA plus. That's interesting. What is the plus meaning, and when do you think the PEA might be ready? I saw Q1. Is that something you would say, yeah, maybe the next 8 to 10 weeks, that's makeable?
Yeah, I mean, we're shooting for the right at the end of Q1. I mean, obviously, there's always a little bit of room in there. You're never quite sure the exact day. But we've got G Mining doing the work, right? And we all know that G Mining is an extremely reputable group. And for us, what we wanted to do in our approach with the PEA was to give real guidance to our investors. Like, we didn't want to have, capital expenditure numbers that were not accurate. I mean, we wanted to be accurate in them. So what we're going to do here is we're kind of moving towards, in some ways, more of a pre-feasibility level costing estimate within the study, because that ultimately will give the real guidance. And the other thing to tell you about the study is that it's really a base case scenario. Like, we believe we can improve upon it. There'll be more ounces coming into the open pit. There'll be growth that will happen. And the PFS, will reflect that. But we really want to show everybody, as of right now, we have a deposit that could be potentially a top 10 producer in Canada.
Mm-hmm. Okay, super. You're currently running also a 15,000 meter drill program. How is that going?
It's going very well. Yeah. The reason we're doing it is we feel that we can add ounces in the top 150 meters within the conceptual open pit. And obviously that brings ounces forward in the production profile, which makes the economics much better. So that's the focus on this 15,000 meters. There's a lot of low-hanging fruit in the pit. Let's go add ounces, convert waste to ore, reduce the strip ratio, and away we go. We're just going to improve the economics.
So the strip ratio reduction is like in the first 50 to 100 meters, right?
Yeah, anywhere from surface to 150 meters, there's just some mineralization that's been hit at depth. We just need to follow it at surface because the deposit hasn't been completely drilled yet. So quite often you'll see deposits of this scale in Canada. They're sort of static, to be completely drilled. This one's different in that it's emerging still. It's growing. So when the deposit came into Goldshore in 2021, there was roughly a 3 million ounce historical resource. And you can see with some good efforts on the drilling, roughly 78,000 meters Goldshore's put in. Now we're at 6.7 million. So I do believe a lot of growth to be had over the next couple of years. But again, I do think it's very important to say, even now, as of today, this thing's going to look solid.
Okay. I saw in your presentation that you have a pit constraint at $1,850 per ounce gold, which looks today very conservative. Gold is almost $1,000 higher. So first of all, what does the 1,850 mean for you, and what would it mean if gold, let's say, stays above those 2,800? Let's call it like that.
Yeah, no, well, the pit right now is based on the limits of drilling. So even if, we used a $2,800 resource price on the pit or gold price on the pit, it wouldn't matter because there's just simply no drilling underneath 500 meters depth right now. For me, I think that's probably about the ultimate pit depth. So I don't see a lot of change in that. There are parts of the deposit that we can extend to the same 500 meters depth, which I think will add a bunch of ounces into the mine life ultimately. But for now, when you're looking at about a 500-meter deep pit, you're maybe getting towards the limits regardless of gold price.
Mm-hmm. Okay, super. I think your pit by now is something like from the depths, like for approximately 300 to 400 meters. How deep could you go? What do you think?
Some of the pits at around 500 meters depth, and I think that's probably about right. As I said, I think there's great potential to extend areas along strike. That's one thing that we really want to focus on. As I said, because the deposit hasn't been completely drilled in the near surface, that's something that we've got to tackle as well. It's really an approach of demonstrating that, hey, Moss has a big potential as is. Can we improve upon it by extending parts of the pit downward? Yes. Can we improve upon it by growing laterally? Yes. But also, let's get this low-hanging fruit in the top 150 meters within the pit. So it's a very good setup for us.
Yeah, absolutely. And I saw also that you think you have easily an 8-kilometer strike length, but you have 3.6 kilometers so far, let's say, explored, if you want to call it like that. So there is a lot potential, left and right, right?
Yeah, I think the one thing that surprised me, I took the CEO job in May 1st of last year. And one of the things that surprised me about the Moss deposit, when you get into an asset in a single body that's 6 million ounces in a single conceptual open pit, it's completely drilled off, all the exploration's been done, and it is what it is. In this case, some of the most basic exploration work in and around the Moss deposit hasn't been done, like just basic geochemical surveys, basic geophysics surveys. That's something that we need to do in and around the deposit because, for me, I believe there's going to be another satellite deposit associated with it. That's my experience, from my Newmont days. When you get into a big ore body, there's usually something around it. Nobody's ever really taken the time to look for it before. Our job is to fingerprint the Moss deposit geochemically, geophysically, and then look for patterns in the vicinity. And, my feeling is we'll get into some pretty good targets for drilling and hopefully into a new discovery.
Okay, super. So we can maybe say the Moss deposit, that would be one mine, one large open pit, but I see you have a 35-kilometer mineralized trend. So what would be next steps there?
Well, again, I think it's first we need to concentrate in and around Moss because all of the ounces we find there are going to be very accretive for the economic performance of the deposit. But if you're right, if you take a look at the big picture, that's what a producer is going to want to see. If, somebody's going to come and invest in us, for an example, do we have something that can be long-lived? Can we get into new discoveries? And it's certainly our land position, 19,000 hectares, suggests that indeed will be the case. And if you look at our land position, there is a satellite deposit about 13 kilometers to the northeast of Moss called East Coldstream, which has roughly 600,000 ounces in it. Those are the kind of opportunities that are along the 35-kilometer trend that really nobody's taken a hard look at in the past. And ultimately, we will get there. But for now, the focus has got to be in and around the Moss deposit.
Okay, super. I saw also infrastructure-wise, your project looks really terrific. You have a power line which is just bordering with your land position. First thing. Second thing is you have the Highway 11, Trans-Canada Highway going through. You have access to road, rail, power, deep water port. I mean, you have really everything there, right? So I could imagine that this is very favorable to bring that thing once in production.
Absolutely. I think from a doability factor, this is exceptional. In my career, I've worked in probably 40 countries. I've seen a lot of assets. this is probably the best infrastructure I've ever seen. When I first went out there, got picked up at the Thunder Bay Airport, drove an hour down the Trans-Canada Highway, and there I was. I mean, it was incredible to do it for the first time. And it just spoke to me of the opportunity that, this will get built because, you don't have to build roads and power lines. And also, if you are going to have a big bulk tonnage gold deposit, you want it to be near infrastructure. And so we're perfectly situated in that regard.
Absolutely. Yeah. And you have already defined 5 expansion targets, which looks really good.
Absolutely. No, I think a lot of room for growth here, not only near the deposit, but in the entire land packages, as you pointed out.
Okay, so grade-wise, the gold is around the 1.5 grams per ton, which is absolutely okay for open pit. Do you have any other metals, or is it really gold only?
I mean, we're a gold focused project. I mean, no doubt. There's very little else in the way of additional minerals. There will be some silver credits associated with it, once it does go into production, but this is a gold deposit.
Okay, super. Coming to, let's say, your financial position, who are largest shareholders so far, and what is cash in the bank? Because that all costs money, right?
Yeah, of course. So we're very fortunate. Goldshore picked up a strategic investor in November of 2023. It's led by Brian Pace Braga as part of the SAF group individuals. And they really have supported us. They control now, on the order of 35% of the shares. We've seen a lot of open market buying with them. Incredibly supportive, but also very strategic in terms of access to capital and the ability to move this project forward. So, to my mind, juniors that do not have strategic backing are at a real disadvantage. And for us to have Brian and the SAF group individuals behind us is a tremendous advantage to move this project forward in a development sense.
Okay, so what is cash in the bank roughly?
Well, we're drilling right now, so I tell you roughly it's about 16 million Canadian at the moment.
Which is super. And that 16 million will satisfy the PEA easily, right?
That's correct.
Super.
Yeah.
I saw also you have around 33.7 million warrants outstanding. What are the strike prices there, or let's say an average? What maturity do they have?
Well, we've got about $4.5 million Canadian of 25-cent warrants coming due in April. Those are the ones that we feel can come into the money. And there's some 40-cent warrants that are further out that we'll have to see, obviously. But, we're hopeful that we can bring in the 25-cent warrants prior to April for some additional cash.
Yeah, that would really help a lot. Super. So next immediate target is, I would say, the PEA. Yeah, that's what I wanted to ask you also. The PEA plus what I said some minutes ago. What means the plus? Are you doing more work than the normal PEA already?
Yeah, definitely. I mean, I think that's really, one of the things that I say our industry has done a poor job of historically is you get these PEAs that get printed. The IRRs are amazing. The NPV is phenomenal. Yeah. It's a marketing document ultimately. And then as you transition into pre-feasibility, all that excitement fades away because reality sets in. Our approach is to take, a more disciplined look at it and really do costing estimates that are in line with a pre-feasibility study. So we're giving real guidance to our investors from day one. We feel that our strategy would be to hopefully improve the economic performance from PEA plus to the pre-feasibility level, because that's a different approach. It's credible in nature, and also working with G Mining. I mean, that's their style of work, and that's exactly why, I called them. I know that they are totally reputable, will give you real estimates. And because, G Mining was involved in the feasibility study of the Greenstone mine that Equinox holds, as one of our near neighbors, we really have a very good handle on what things are going to cost. So again, I think you can take our PEA plus as real guidance.
Okay, super. Wow. What would be the gold price anticipated in that PEA? Can you say that already?
I'm not totally sure. Usually you do a 3-year trailing average, which is at about $2,100 gold. I mean, I personally, I find that to be conservative right now because
Me too.
the delta between the 3-year trailing average and spot price today is as high as it's ever been. It's 35%. And And typically, if you go back over sort of a 50-year period, it's, 10 to 15%. So, let's see, maybe we can report at a little higher gold price, but 3-year trailing average is normal.
Okay, super. So I would say things look really good. We see us at PDAC latest in 4 weeks, and maybe you have already the PEA out.
We'll see, but looking forward to PDAC and getting the story out there.
Super, that would be great. Thanks, Michael. That was a fantastic introduction, and I have a very good feeling that we talk very soon.
Thank you. Appreciate it.
Thank you very much. Yeah, ladies and gentlemen, Goldshore Resources. New company here on Commodity TV. I really urge you to have a look at the company. It looks really, really interesting. I think the Moss project is a fantastic project. It is an open pit and it has a lot of potential to become larger and larger. But they have already almost 7 million ounces gold here. The work is going on. I think the PEA Plus will be something which is really like a big milestone for the company and will show, the economic, positiveness of the project. And really have a look at the share, at the company, and make sure you get some. Thanks for watching us, and bye-bye from Switzerland.